Morning, everybody.
Morning.
How are you guys? You guys are busy already, huh? Marilyn, right off the bat, I want to ask you, what do you have over there?
Short sales from the weekend, 25.
Offers?
Wow.
Offers
On one property?
on one property.
Oh my goodness, were they good offers?
I think they're all good offers.
Really? So they're all like full price or a little bit above?
Correct. Actually, above.
Oh, that's fantastic. That's fantastic. I mean, the market is so fast. Great. Can you fill us in on the highlights of a short sale?
Couple highlights. As an agent to negotiate the best half a short sale is the presentation of your package. The hardship is a key thing to negotiate this HAFA and the financials. Obviously for a client, there's a lot more benefits, but the high ones will be getting relocation assistance. In addition to that, we can get the listing price approved before we get in an actual contract, so we can start marketing prior to. Some of our sellers don't want to put the properties on the market, so it's extremely important that they know that we can actually negotiate the short sale and get that listing approval prior to
So
that.
that's almost like when you want to make sure that your buyer is pre-qualified before you take him to show a house. You want to, with half a short sale, you want to make sure that you're getting all the paperwork, you're processing the paperwork, and that they are approving the half a short sale before we even get an offer. And then when we have an offer, it's sliding the offer in and it's able to execute quicker, right?
A lot faster, yes.
Now, Gray, if there is somebody that has a first and second mortgage, they're still qualified for HAFA?
And yes, they do. Obviously, even we did one with 3 liens, so they do. If all 3 liens agree with it, they fly half a short sale.
So 3 liens is what? They had a first, a second, and then they had a home equity or something?
Yeah, usually it's at 80-10 and an equity line of credit afterwards.
And you can still get a half a short sale.
You can still get a half a short sale as long as all 3 liens actually agree to it.
Great. That's fantastic. And then what is the money that they're given to help with relocation? You said they have relocation, so.
For the seller, I will tell you that varies. Typically, it's up to $3,000 depending on the financial status of the client. However, right now, the Bank of America is giving up to $5,000. So we just got $5,000 for another client, and it's based on their financial situation, but they are giving up to $5,000 right now.
Well, that's fantastic, huh? It certainly helps moving. Hey, April?
So we as realtors, we know what HAFA is. For somebody that doesn't know what that means.
The Make a Home Affordable program, it is the modification before it was required to do a modification before you enter into a half a short sale transaction. Right now it's no longer required.
So you don't have to try to do a loan modification first?
No, you don't have to. You don't. The only key to that is that you do not qualify for a modification. So you don't have to go through the whole process of qualifying, make sure that they give you a program or anything like that. That's why financials are very important. If you see that your client does no longer qualify for a modification, that is sufficient to submit it as a HAFA.
So this is perfect for somebody who's lost their job, had a medical emergency, things like that, that's dramatically changed their situation and their living standards versus a few years back when they purchased their home.
That is correct, yes. And one of the things that you want to identify as a hardship is obviously a divorce is a hardship, a death in the family is a hardship, a loss of employment is a hardship. But when you're talking about, well, we have a broken roof and we have to do so many things to the house, that is not a hardship, that is a wear and tear. So it does not qualify as a hardship. So it is very important to identify the qualifications of a hardship.
So owner have to be late on payments?
No, actually no. It is the hardship is anticipating that they're going to become late, that they're no longer able to afford. I have 2 short sales that we qualified and they were not late at all.
They were not late on
They were not late at all, but it was a divorce. Obviously, that is identifying a future hardship, that if the divorce is complete, the person that is going to stay in the property will no longer be able to support the mortgage. So we were able to do a short sale on that, and the good thing is that no credit was disturbed because of the late payments, because remember, that is what it hurts the credit.
That's huge. That is huge.
In this case, it wasn't, right, because we were able to get it qualified, it's done, and now they got the divorce, and they were able to purchase another home without having to wait 2 or 3 years for that.
I attended an economist meeting with Wells Fargo and Freddie Mac a couple weeks ago, and they were saying that still 48.3% of property owners in Arizona are still underwater. That's a lot. That's a lot. So it'll be interesting to see in the next few years what that means is in regards to foreclosures and what that's going to mean in regards to short sales, right? but certainly we're not anywhere near being over with that. Having said that, I have a great announcement, and it's still in the process, but I can tell you that a couple of the institutions are looking very closely at situations where you have qualified and approved teams that are working with qualified investors. That, let's say you have, I know that you have this client of yours that doesn't want to put a sign in the yard, and they don't want to market, they don't want to pull the kids out of school, but they can't afford the home anymore. They need to short sell, right? And that's, it's inevitable, it's going to happen. So they might be able to qualify for a new program that's on the cusp of coming out, and with that program, qualified investor will come in, purchase the home. So it's kind of a transfer of title. So they won't own the home anymore. The new person, the new owner will own the home. They'll be able to rent it back and sign a lease purchase agreement. So if they choose to, they can repurchase the home in 3 to 5 years at the current market value. I mean, that's just amazing. I mean, it doesn't have to disturb the family, doesn't disturb the kids out of school, and at the end of the day, you're going to have a lower payment that you can afford better than what you do. I'm excited about that. It's not here yet, but it's like right around the corner, which is hugely exciting.
That is going to be amazing. Yeah.
That's huge. Awesome.
Yeah.
Really have some, really have some happy homeowners that are able to save their homes from facing that potential hardship with the foreclosure or having to short sell and dislocate their family.
Right. Absolutely. As the market changes and the landscape changes, the stories are just, you know, they just start coming out. I mean, the real estate market, as it affects our community, I don't think that we're going to really see the ramifications of that for several years. And Anna was sharing some very sad statistics with me yesterday. Would you be okay sharing that with the group?
Yeah, definitely. I had mentioned that in a retreat that we had a couple of weeks ago. Tina Tambor from the Comfort Report Consulting, she mentioned to us that the highest rate of suicide is among teenagers is the Hispanic community, because a lot of them translated for their families to purchase the home, and the family has lost this home, so the children have taken on the burden of thinking that it's their fault, going into severe depression and you know, to the point of committing suicide. It's tragic. So the impacts of it are severe. That's
why it's very important as an agent works with a community that they're not that familiar, say the Hispanic community, and if it is the adults don't speak English, it's really beneficial for them to find an agent that does speak Spanish, so that they're communicating directly with the people that are purchasing the home, and the children don't have the responsibility of that decision. In trying, exactly, that is a tremendous weight that those kids are carrying on their shoulders.
Right. I can't imagine being 12 years old and having to have that thrown on your shoulders and not know. It's a lot for a child to take on.
Right.
So back to the HAFA program, they may be able to qualify for selling their home, correct?
Oh, absolutely. Yeah, absolutely. Any short sale it's going to be based on the financial and hardship. If that is the hardship, obviously, that would be something that we have to push. But we have to be very careful on what it is, a hardship, a financial hardship, which is what they're looking for, not just a tragedy, which is what we're discussing.
Right. How does that come into play, for example, because maybe your job situation didn't change, but maybe you were in a loan that was an adjustable loan, and so at the time when you first received that loan, you could afford it, but now, although they really haven't ticked up, but as that happens, I mean, there's going to be another wave of foreclosures when the loan situation changes, right?
Oh, absolutely. That is actually, and it's starting to happen. We see that all the time now. Obviously, it is a hardship because the clients enter into a loan that they could not afford at the very beginning. Mm-hmm. So that is a financial hardship because now the adjustables are coming to them and it's bigger their income. As we all know, so many homeowners enter into property more than they can afford. So it is definitely a financial hardship.
Also, I just attended a class the other day. In addition to HAFA, FHA, which HAFA doesn't typically deal with, they have implemented a system in order to help people short sale their home. And it is a system in which they call it the pre-foreclosure sale procedure, where they actually allow people to, there's specific guidelines and rules that everybody must abide by, and it helps to benefit the homeowner that they can short sale the home, and they do have a homeowner seller incentive for selling the property in less than 90 days of $750 to $1,000. So it is another item and tool available out there for somebody that has an FHA or a VA backed loan.
Oh, that's fantastic.
That's a good thing that you mentioned that because there is obviously that form of short selling. You have the standard short sale, you have the co-op. A lot of people don't know what a co-op is, but it is basically a short sale that does not require the financials of the client. But in order to get to the co-op, you actually have to go through, qualify through the HAFA and other ones, and really identify that there is no financial ability to represent your client in that. The co-op is extremely fast. Because there are no financials, there are really no verification of things, but it is only and solely focused on the property. So that is the one that you want to get to, but the hardest to get to.